The reports that we're going to come out tomorrow. So first, we're going to get an update for this table. These tables, the supply and demand tables, is called the WASDE, the World Agricultural Supply Demand Estimates. So they look at supply and demand for the major crops. They do the forecasting on both production and use, not only here in the US, but also globally. So we're going to get an update on the WASDE. We're going to get an update on, in particular, South American production, which I'll talk about in just a little bit. We'll get an update on the winter wheat seedings report, and I have a slide on that I'll show you kind of what the trade is expecting to happen versus what the USDA numbers will show. And then the last one is what they call a quarterly grain stocks report. So every quarter, every 3 months, we do an inventory. How much grain do we have on hand? So we get a better idea of how quickly are we using up those inventories. And then the final one is actually the official final numbers for planted acreage, harvested acreage, and yields for everything but the small grains. The small grains report for wheat, barley, oats came out in September. For corn and soybeans and cotton and a bunch of the other crops, the final official numbers will come out tomorrow on acreage as well as yield. So we'll have a final production number on how many bushels do we produce. So again, I don't want to go through all of these numbers specifically. We're not expecting any major changes. So when you look at some of the previous information we had from USDA versus what the industry analysts are expecting to see, really it's going to be, I mean, based on what we expect to see, kind of some minor tweaks or adjustments. We really don't expect the reports coming out tomorrow to be major upheaval in the marketplace. So that hopefully will be a good thing. So right now, the grain market's primarily concerned on how quickly are we burning through or using up our inventories, right? We have a pretty good idea of how much we produced. Right now, the market's really focused on how much are we using and how quickly are we using that. For corn, we have 3 major uses. So the blue line on top is called feed and residual. Let's just think about that as the feed pile, the amount of whole corn that goes into the livestock sector. And it's not just beef, it's also pork and poultry and dairy as major users. The red line is ethanol, and then the black line is exports. And those are kind of our 3 big buckets. The dotted lines on the far right-hand side are the current USDA forecast. So those are the ones we got in December. Those are also the numbers that will be updated tomorrow morning. So just to look at some general trends, for feed, it's down just a little bit. The amount of whole corn, again, that goes into the livestock sector. Part of that is because we are seeing the herd size drop. We're seeing total meat production slip just a little bit because there's fewer animals, in particular for beef, but also for pork. The poultry numbers are going to be about the same. So the fact that we have fewer numbers, our meat production is going to be kind of stable to slightly lower. Probably makes some sense that we're going to see lower feed consumption. On the ethanol side, I'll show you a graphic in just a moment. Total ethanol production and therefore demand for corn is expected to stay relatively stable. Now, there are some market analysts that are saying that number might slip just a little bit, and I'll show you a graphic in a moment to explain that. The bigger concern, and obviously the one that's the number that's the most difficult to forecast, is the exports number. Just because we don't know when an international buyer will come in and buy U.S. corn. We don't know how much they're going to purchase. We tend to have some customers that are pretty stable and pretty reliable buyers. And then we have these ones that are kind of herky-jerky, and we just don't know when they're going to come in and do anything. So I'm going to focus primarily on the ethanol and the exports numbers, because those are the ones that have some uncertainty about them. The feed number doesn't change very quickly, so it's a little bit easier to forecast. Just looking at ethanol, so I want to follow that blue line. So every week, the Department of Energy collects information on how many gallons, or in this case, barrels of ethanol are produced each week. So this is weekly numbers. You can see that it bounces around quite a bit. We do have some seasonal patterns we tend to follow, depending upon if it's summer versus the winter months and summer travel with vacation time. If you notice, the last couple of, basically since kind of this marketing year began in September, we're seeing a couple spikes down. Now, the one is kind of a seasonal one we normally see. It's the second one that we're a bit concerned about. So what's happening is some of our ethanol inventories are starting to build. So the plants are running, they're producing ethanol faster than we're consuming it. And there's some concern saying, well, those inventories are starting to build. The reason is because our miles driven has slipped a little bit because of higher gasoline prices. So when we look at total amount of corn going into the ethanol sector, you know, I wouldn't be surprised to see USDA cut their total annual forecast a little bit. But it's, I think, in my opinion, a little too early to start making big chops or big cuts in the ethanol consumption number. On the export side, we already know that exports are well behind normal pace. So let me explain this table really quickly because I'll show the same exact information for soybeans, for all wheat, for spring wheat. Okay, so the layout is going to be the same. So we've got 4 years of annual numbers. So the far left-hand columns, those first 4 columns, are 12-month totals. So how much did we export for corn? Now, this is in metric ton. On the very bottom, how much do we export every year? And this gives a breakdown by country. And so when we start thinking about what does this mean for future export sales, not only corn, soybeans, but also for wheat, we have to look at not only how much have we sold, but who's buying. Okay, so these are 12-month totals. The 2 columns on the far right-hand side are year-to-date totals. So when we start the marketing year for corn and soybeans, that's on September 1. How much have we sold? Now, this would be sales. They haven't been delivered yet, but this is grain that has been contracted for sale. So some of it has been delivered, some of it not. So how much have we sold from September 1 through the end of the year? So this is from December 30 of last year, and this is December 29th of this year. So we can start to make some comparison at not only the annual totals, but let's look at the short-term sales. How are we stacking up today relative to where we have been in history? So when we look at the very bottom, last year we had a very good, strong export season for corn, which really did help us. When we look at the total for this year, we're well behind last year's pace. So let me go back one slide or a couple slides. If you notice, we've got 2 years now where we've had we coming off a record high corn exports. We've had some decrease in those corn export levels. Okay, so who's buying less? Well, the big kind of 800-pound gorilla, and we're going to talk about this quite a bit today, is really China. So 2 years ago, they went from very small levels of imports of U.S. corn to being the #1 buyer. Okay, now last year they dropped off a bit, and a lot of those sales, if you can notice, a lot of those sales were in the first few months of the marketing year. When we look at where they're at today, they're well behind that pace. So China is really the one that's been very slow to buy U.S. corn, although they're not the only one. So our #1 buyer historically has been Mexico, and Mexico's been buying U.S. corn at a pace that we'd normally like to see. China is well behind. I think there's a couple of reasons for that. We can talk about it if you're interested. Japan is also a little behind last year's pace. Now, for Japan, I do expect them to kind of pick up the pace as we get later into the marketing year. So I'm not real concerned about the Japanese numbers, but I am very concerned about the Chinese numbers. So if we look at where we are right now, as far as export pace, we're not quite half of where we were this time last year. And that's putting some downward pressure, at least psychologically, that's putting some downward pressure on corn prices. And of course, that psychology kind of spills over into the wheat market. So this is one of the things I do expect to see USDA to slightly drop or reduce their forecast for ending stock for exports, which will increase the amount of corn we'll have available at the end of the year. So when we look at what the numbers were from December versus what the trade is currently expecting, they are expecting a slight increase. And my guess in ending stocks being total supply minus total use. How much do we have left over in the bin just before harvest? And I do think a large portion of that will become will come into play because of a reduction in the exports number. I would expect this exports forecast to drop. We may see a slight slippage in ethanol, but again, we'll have to wait to see what comes out tomorrow morning. When we look at kind of bigger picture, stepping back a little bit, you say, well, how much margin for error do we have in corn? I really want to focus on these blue lines on the bottom. So those are the stocks to use ratio. It's scaled on the far right-hand side over here. So if you think about our ending stocks divided by total use. So what we're saying is what percent of our total needs are we going to have in reserve just before harvest in case there's a problem? Okay. And there's a strong relationship between that, how much our percent carryover stocks and prices. So let me look at this. Our record low back here is actually in 1996. We had kind of a very low carryover. Our margin for error was very small in this 2012, 13, 14 time period. And they're kind of on the lower end of the normal range right now. So just a couple of time periods. So let's look at how these numbers here, the stocks to use ratio, compare to long-term corn prices. Okay, so what happens is as that stocks to use gets small, as our margin for error gets tiny, we tend to have higher average prices and a lot more price volatility. Prices become a lot more sensitive to new pieces of news. And this is not just for corn, but also for soybeans and wheat and all the other commodities. So what's our margin for error? So what I pulled, this is as of about 8 o'clock this morning, Central Time. This is what's called a long-term continuation chart. So if you notice, this goes back all the way to 1990. So this blue box right here, 652, that was the futures price for corn for the March contract. So if you're going to deliver corn today to the elevator or an ethanol plant, this would be the futures market price that the local buyer is going to use as that starting point. So you're going to have to subtract the basis off. Okay, the reason I show this is, now this has not been adjusted for inflation. So I want to be very careful. To adjust for inflation, it gets kind of complicated. It takes a lot of math. And just to make sure I'm as current as possible. So there's no adjustment in pricing for inflation. So let's look back at 1996. Notice we had that spike in 96. We had a spike actually during spring's work of 08, and it dropped back down once we got some rain. Then we had these 2011, 12, 13, 14 time period. And we've got what happened this last spring. So if we look back kind of historically at today's price levels for corn, looking back historically, you do notice this relationship, right? Let me go back one slide. So our inventories are high. We got a lot of grain in the bin. We tend to have lower average prices and more stable prices. When that margin for error gets kind of tight, when we don't have a lot of margin, when people start to get really nervous, we tend to have higher average prices and more price volatility, because every new piece of news makes a bigger difference in prices and kind of people's expectations for the future. Okay, so where are we today relative to history? We've got very strong corn prices. I know that's putting pressure on livestock and livestock profitability. It's also putting some pressure on ethanol and ethanol profitability, but it's also impacting exports. Again, one of the reasons we're seeing slower export pace is the price for corn is higher. Okay, higher prices, the buyers get a little bit more sensitive and saying, well, do I really need as much as I had last year, or as much as kind of the demand base? Do I need as many bushels as I did last year? Is there some adjustments that I can make to try and purchase less corn? So let's just zoom in. This is old crop corn. I just want to give you an idea of some price trends. And I really do want to focus in on kind of what's happened since harvest. For old crop corn, we've been kind of in a trading range from about 635 to about that call it 685 level. And we're right now kind of in that middle of that range. And one of the reasons we're kind of in the middle is because of that export pace being a little bit soft. Okay, now let's look at new crop corn. So this would be if you're looking at growing corn in 2023 and starting to think about, is there going to be a battle for acres? You know, how many acres does the corn crop need versus soybeans versus wheat? And that's going to be my theme as I work through this, because a lot of those questions are going to start to come up now after the first of the year as we get into this planting phase of how many acres is everybody going to plant. So if you look at pricing for new crop corn, again, since we saw harvest, yes, we've been in a trading range, but it looks as though even we had a little bit of a spike here at the very end of the year. You know, even though prices are good, so I'm going to be very careful. You know, $5.90 corn on the futures is still an exceptional price when we look back historically. And we had lower prices, obviously, this last summer when we thought we were going to have a bigger corn crop. So right now, corn, even though we've got high fertilizer prices, our expenses are very high, rents are coming up, you can still make some pretty good money growing corn, even at today's levels. And I guess I'm encouraging farmers to start pricing a little bit of their corn, new crop corn now. Don't go aggressive, don't get crazy with it, but to lock in some of those first bushels of possible production. Because if South America has a good crop, the Chinese don't come in and buy a lot of U.S. corn, our inventories of corn, and assuming we have some good acreage, planted acreage next spring, will be sufficient. Okay, so we're not, even though we're a little bit nervous right now on corn supplies, I think that attitude could shift and change fairly quickly. Now, what's going on in South America? When we talk about corn, and I'll kind of talk about soybeans too later on, we've got two crops of corn in Brazil. And Brazil's the big corn producer. Argentina is really important as well. But when you look at the largest corn exporters in the globe, it's the United States is number one, Brazil is number two, Argentina is number three, and Ukraine is number four. And I'll talk a little bit about Ukraine during my wheat talk. So what happens in Brazil is important, but Brazil has two corn crops. They have what's called the first season crop, which is what's growing right now. And notice that most of that production, the acres and the bushels produced, is in kind of this southern part of the Brazil. Then they have what's called second crop corn, which is the safrinha crop or second crop. So once they're done harvesting soybeans in the northern part of Brazil, they'll come back and start planting corn. In the old days, they had soybeans on soybeans, and there's still quite a bit of that's done, but a lot of guys are running into rotation problems, so they're doing corn, soybeans. So this corn crop won't be planted until after the soybeans have been harvested. So this is the corn crop right now that's really the focus of weather and weather forecasts. Okay, so southern Brazil. We get to Argentina. Here's southern Brazil right here. You get to Argentina, and they have a pretty tight production zone. So most of the corn and soybeans are kind of in the central part. Their wheat production, and Argentina is a pretty big wheat producer, is very similar to the corn area. They have a little bit more in the north, but it's very, Buenos Aires is kind of their big wheat producing region, but they do have some in this central area as well. This is kind of their heart of their agriculture. I just want to geographically point out where we're at. So let's look at soil moisture and essentially growing conditions. So this isn't a drought monitor map like we have in the US. What they're trying to measure is the soil moisture in the top meter of soil, about the top 3 feet. Think of it as the root zone. Okay, notice if you get into the central and northern part of Brazil, where right now a lot of the soybeans are grown, they're in really good shape moisture-wise. The problem is in this southern growing region, as well as in Argentina. Now, Argentine wheat production is going to be down. They're going to start harvesting pretty soon here. They're just finishing up seeding for soybeans and corn. So we got some growing time left in the corn and soybean crop. But this very, very dry region in Argentina and southern Brazil is really what a lot of the market analysts are talking about. Is that going to have an impact or not? It may have an impact in the amount of Brazilian corn that's available that would compete directly with us for our exports, at least short term. Shifting to soybeans. So let me pause just a second. Any questions on corn before I jump into soybeans? I kind of had to set the corn up because what happens in corn kind of spills over into wheat. All right, hearing nothing, I'll keep going then. Soybeans, kind of the same layout. We have the production, we got consumption of soybeans. Again, most of these numbers will be updated tomorrow, so I don't want to spend a lot of time on them. When we look at soybean usage, and this impacts obviously canola as well. Soybean usage, two big categories. The blue line is crushing. It's domestic use. Take the soybeans, we crush it into oil in the meal. Meal goes to livestock feed. The oil goes to a lot of different uses, and I'll talk a little bit more about that in a second. And then we got the exports, and the export market typically has been where all the excitement is, and that is still a really, really important piece. So, but I do want to talk a little bit about what's happening on the crushing side, because we're in North Dakota now. There's currently 3 crushing plants, soybean crushing plants, that are either under construction or under under development. They're being planned. Okay, so this is kind of a big deal for North Dakota as a region. But even when you look nationally, there's actually 14 different crush plants that are either under construction, expansion, or development. So under construction means typically it's a new facility that's being built, like the ADM plant in Spiritwood, just outside of Jamestown. There are crush plants across kind of the traditional central corn belt that are under expansion. There are existing plants that are growing, getting larger. And then there's new plants under development. So these are the ones that have been announced, but may or may not actually be built. Now, at least hypothetically, if all of those 14 plants were built, we would increase our crush demand, the amount of soybeans we need US-wide, by about 20%. And that's a big, big number. Now, again, my opinion, not all of those 14 plants will be built, but a significant number of them will be. What's driving this? The main driver is called renewable diesel. And I know it down in Dickinson, the Marathon plant in Dickinson has now been converted over, and they're making renewable diesel. So just really quick, I want to explain the difference between biodiesel and renewable diesel, because this also spills over into canola. And there's 5 brand new canola crush plants going up, at least under construction, in Canada. If all of those 5 plants are built and operationalized, they would be about a 50% increase in the crush capacity in Canada for canola. So this has all been primarily driven by renewable diesel. So let me explain really quick. Biodiesel we've had for quite a few years. That's where you take soybean oil or canola oil, refine it to a very high level of purity, and then you blend it with diesel fuel. So you get a B5 or a B3 or a B10. So we're taking soybean oil and blending it with traditional diesel fuel. We've had that for quite a while. This new, what's it called, renewable diesel is different. You're taking soybean oil or canola oil, refine it to a very high level of purity. So it's really high level stuff. And then you run it through a refining plant, like an oil refining plant that's been modified, and you make diesel fuel. So the product that comes out the other end is certified as diesel fuel. Even though you're making it out of soybean oil instead of crude oil, it's classified as diesel fuel. So it has the same properties as regular diesel fuel does. The difference is the carbon footprint is much, much lower. So, and almost all of that diesel fuel is either going right now to California or to Washington State. And this is really what's driving it. It's this low carbon fuel standard in California and other states that's really driving this expansion and demand base. So this is all coming online. The ADM plant in North Dakota is supposed to be contracting for 2023 soybeans. They're expected to start production sometime in 2023 and start spitting out product in 2024. And from an oil standpoint, essentially all of the soybean oil coming out of that Spiritwood plant is going to go to Dickinson and the refining plant in Marathon, that plant in Dickinson, to be refined into renewable diesel. That renewable diesel is going to be shipped into the California market. So this is something that we're going to be watching and talking about for quite some time in the oilseed market. And I know the crush plants in Canada for canola are talking about doing the same thing, about refining their canola to a very high level and then selling it into the U.S. market to make renewable diesel. So renewable diesel and biodiesel are different. So let's look at exports. Just to give a high level snapshot. Now, if we look again, the last 4 years, this is 12-month totals. Our record large was 2 years ago. We've had a little bit of slippage last year, mainly because China didn't buy quite as much soy as they did the year before. And again, part of that is because of our trade war and they're rebuilding inventories. So let's compare where we are this time for the last several months relative to where we were this time last year. And if you notice, our total sales are actually higher. Some of that is because China has come in and purchased a little more than they did this time last year. But we also have Mexico has come in and bought a little bit more. European Union is down a little bit. And we've got a bunch of other countries to kind of spill over into that. Moral of the story is, because of the large soybean crop coming out of South America, they're buying just enough inventory from the U.S. to be able to meet their needs until that crop out of Brazil is harvested and becomes available. Once we start to see that shift, once we start to hear about soybeans in Brazil being harvested and delivered to port, my expectation, and everybody else's in the marketplace, is China and a bunch of these countries are going to start shifting their purchasing into that South American market. And this year, that's going to happen a little sooner than normal, mainly because it was planted earlier than normal. And actually, way in the northern part of Brazil, some of the soybeans are actually starting to be harvested right now. They haven't gotten into the kind of the peak of their harvest load yet, but that's coming up in a matter of a few weeks. So if you've got some soybeans, you haven't sold them, you probably got until about the 1st of February to try and get those sales cleaned up for old crop. Because once those soybeans from South America, in particular Brazil, hit the marketplace, we're going to see a pretty dramatic shift. So the question is, even though our export season started out quick, it started out early, we've had some really good export sales, the expectation is that these might drop off quicker than normal. Normally, we can get to the end of February before we start to see that transition. But because of the early planting season in Brazil, their early harvest, the fact that they're going to expected to have a very, very large crop, that may shift our timing a little bit. And we may not be able to get to the total that we saw last year. And that's really what USDA is currently expecting. So when we look at small changes, this is the number we got last month. USDA, most of the private analysts are looking for a small increase, likely because of a small drop in exports. Okay, so again, we'll wait to see what comes out tomorrow. But again, no major shock value, no major big disruptions. I do want to talk a little bit about the South American crop, because that's going to spill over into the other oil seeds like canola. Just to give you some perspective and make sure that you understand some of the reports that are coming out. So the blue line is total Brazilian soybean production. How many total bushels or tons are they expected to produce? Again, that's the dotted line on the far right-hand side. The U.S. is in green and Argentina is in black. Now, Argentina is going to have a tough year. Okay, and a lot of people are expecting that dotted line for Argentina to start slipping and dropping. And that will help soybean prices. However, when you look at the drop off here relative to the big increase we're expecting out of Brazil, this really isn't going to have that much impact. It's really the Brazilian crop right now that everybody's watching. So even though this Argentine crop might slip, might get a little bit smaller, when you look at the amount of increase they're expecting in Brazil, that's going to more than overwhelm or compensate for any kind of loss we're getting out of the Argentine crop. When shifting to exports, Brazil's been the #1 soybean exporter for almost 10 years now. They beat the U.S. here a few years ago, so they really are the dominant exporter right now. My biggest concern when you look at, so the blue line is exports out of Brazil, green line exports out of the U.S., and the black line is exports of whole soybeans not processed product, but whole soybeans out of Argentina. Argentina is not a big exporter for whole soybeans. It really comes down to Brazil and the United States, with China being the largest buyer of whole soybeans. So one of my concerns longer term is for the last 20 plus years, we've really been counting on this nice, steady increase in growth in the amount of soybeans going into that Chinese market. And a lot of that has because of the growth of their economy, and the standard of living has been increasing. Now, for several years, it seems as though that's kind of flattened out. Now, this bump we got, this drop right here, that V, is a combination of African swine fever, where their hog herd was cut dramatically, as well as the trade war. And those things happened kind of at the same time. Now, China's been able to rebuild their hog inventory, but not quite to the levels that we saw before this African swine fever issue and problem. It's kind of stabilized a bit. So with a continuation or potential growth of more soybean acres in Brazil, what does that mean long-term for oilseed prices? And again, that's why shifting to more domestic crushing might actually help support the oilseed market here in the U.S., both canola as well as soybeans. When we look at the margin for error on soybeans, very, very tight. Our inventories are expected to be really tight this year, even though we had a pretty good production year. Now, our record low is back here in 2013. We saw this big buildup because of the trade war. We've been able to take those inventories down again. So we're back into this range where, you know, the soybean market's pretty concerned and sensitive. You look at where we are price-wise, notice, again, the correlation. When we got big inventories, we tend to have lower prices with less price volatility. Where are we today? We're at about almost $15 in the futures market for soybeans. Those are still historically some very, very high prices. Even though we saw higher this summer, we're still at some very, very high price levels. Where are we for old crop? Again, old crop prices have been supported pretty well because we've been having this good export pace for soybeans. But as I said, I'm guessing that may start to drop off as we get into later January and February. So we'll have to see how the soybean market deals with that. When we look at new crop soybeans, still some very, very good prices. So the market is signaling we need to hold our soybean acres coming into 2023. And when you look at $14 in the futures, even though you might subtract off some basis for local delivery, those are some still very, very strong prices historically. So the oilseed market is going to be very competitive, and they're going to work very hard to hold their acres. Coming into, as I said, what's going on in Brazil production-wise, I just want to see, here's this big bump kind of in the coastline of Brazil. If you take that and go straight across, you're right in the middle of Mato Grosso, which is that big, Mato Grosso and Goiás are the big, big producing regions for South America, for Brazilian soybeans. The soybean production in Argentina is pretty much right on top of where they grow corn. We just showed you the soil moisture map. Southern Brazil, Argentina are really, really tough shape. But if we take this bump, this bubble, and go straight across, that's the middle of Mato Grosso. Northern Brazil has got some really good soybeans coming, and we have to be aware of that. Moving to wheat, finally into something that's important, right? So let's look at the wheat complex as a whole, the big picture on wheat, because we do have competition that goes on between the classes. Our inventories, our ending stocks of wheat are finally starting to come down, but most of that is because we've had a couple years now of some lower yields and our acreage has been dropping. We look at current conditions and consumption. Where do we send all of our wheat? The blue line is domestic milling. So the USDA calls it food, but it's really domestic wheat milling. And then the red line is exports. Okay, and this is the export market is really where we've been struggling with U.S. wheat. Now, last year, the drop-off in last year, some of that was because of a low spring wheat production and our exports, because we didn't produce it, it makes it more expensive. our export sales for wheat were off quite a bit. Now, some of it was spring wheat, but also some of it was winter wheat. USDA is forecasting actually a slightly lower number for total wheat exports this year versus last year. Now we're getting down to some really low levels. We haven't seen these low levels of wheat exports out of the US for a long time. And part of our problem is that in the global market, especially for winter wheat, our global winter wheat market, we're still pretty high priced compared to some of the other places that you can buy wheat. So where are those other places and who's going to be exporting wheat? The red line is Russia. Russia had a really big wheat crop this last year. USDA is forecasting a pretty substantial increase in the volumes of wheat that Russia can export. I'm personally a little concerned. I don't think that will happen because there are some shipping problems. The ocean freight going from Russia out of the Black Sea is getting very expensive. Obviously, a lot of that is because of the war. So I'm not sure that Russia will be able to export all of their wheat, at least the USDA is forecasting, but they're still a major supplier and a very low priced wheat right now. Some of these other countries are shaded in the background. I just wanted to include, there's a lot of different countries that export wheat. The black line is the United States from a volume standpoint, and then Ukraine is the blue. Now, we are expecting, obviously, their production as well as the exports out of Ukraine to drop pretty substantially. But there are some other countries that are picking up at the pace, like Canada, because they had a pretty good year, and I'll talk about that in a minute, as well as the European Union, which is that purple kind of in the shaded background area. So we still have a very highly competitive global wheat market. How are we doing in the US? Well, when you look at all wheat classes, we're behind where we were last year. Last year was not exactly a banner year. Okay, so our big three export destinations, the big three that buy wheat from us, Mexico, Philippines, and Japan, are all behind the pace of last year. Now we're selling some to a little bit to a lot of other miscellaneous countries, but our big three are kind of behind the pace that they normally would purchase at. And that's a little bit concerning for the wheat market. Okay, and Nigeria is down, but I do expect them to come back later on in the season. Historically, they tend to come in later in the season and buy. Last year was a little bit of an anomaly. So how are we doing for all wheat inventories? We're finally getting our wheat inventories down to levels that are, I think, in most people's mind, reasonable. Okay, so let's look back here in 2007 and 8. That's when we had the really big spike in wheat prices. Our inventories, both domestically and globally, were very small. We have much better inventories this year than we did back then. So that's one of the reasons we did get a rally in spring wheat in general, but a lot of that was because we had a very wet year. So our ending stocks in wheat are what I would consider kind of the low end of normal. When we look at winter wheat seedings report, that's one of the things we're going to get out tomorrow. How much winter wheat actually got seeded. Okay, the black line right here is what was seeded last year. The blue line is what the traders, the private analysts are expecting. So for all winter wheat, up just a little bit, but most of that is because of soft red winter wheat. It's the Illinois, Missouri winter wheat. It's not the hard red winter wheat, which is the Kansas, Colorado wheat. So that is expected to be up a little bit, but not dramatically. Soft red up a little bit, but not dramatically, and then white wheat about the same. So yes, the winter wheat crop in Kansas and Colorado are in pretty tough condition right now. But if they have good spring rains and they've got a nice warm spring, we still have the potential to get a good winter wheat crop. Focusing specifically on spring wheat, yes, our spring wheat inventories are down. And that was because obviously we had last year we had a drought with very poor yields. This year, our yields were actually pretty decent. Quality was pretty good based on some pretty late planting. Acreage was down a little bit. Okay, so we've had a couple years now where we've had some production issues. Our demand base has shifted downward a little bit, but not dramatically. So One of the concerns, though, let me go back. One of the concerns, even in the U.S., even though we had some lower production years, the Canadians actually had some pretty good years. So the green bars is U.S. spring wheat production. The gold bar is Canadian spring wheat production. So yes, last year, both U.S. and Canada had drought conditions. Our yields were very low. We had a rebound, especially in Canada, for planted acreage. Their yields came in very good. So when we look long term, their spring wheat crop is pretty typical, actually been pretty good based off the last couple of years. Ours didn't quite recover to where we were back here in 2020, but we did have a recovery. So when we look globally and we think about spring wheat supplies and the competition, not only domestically, but more importantly, internationally for spring wheat, there are still some pretty good spring wheat availability. So how is our spring wheat export pace so far? Again, about half of our spring wheat has to hit the international market. When we look at total export sales, again, this would be the 12-month totals. This is where we are since June 1. So again, the wheat marketing year starts on June 1. Our exports for spring wheat have actually been pretty decent. I mean, compared to last year, but recognizing last year wasn't a real whippy year. Part of the drop-off is because of the Philippines. Okay, Philippines being our #1 buyer of spring wheat. The Japanese are off a little bit, but the Mexicans have increased. So we've actually had a little bit better spring wheat export sales into Mexico than we saw last year. So this is a good thing. This has been a trend over the last several years. We're sending a little bit more spring wheat into that Mexican market. They're starting to buy U.S. spring wheat as well as Canadian spring wheat, and they seem to like it. It's working pretty well for some of their bread products. Now, how does Japan? I do expect the Japanese to kind of pick up the pace. The Japanese tend to be some very reliable, steady buyers. So far, they have been sourcing a little bit more of their product out of the Canadian market instead of the U.S. market, so we have to be cautious of that. My bigger concern, of course, is the Philippines. And one of the things that concerns me about the Filipino market is that given the high prices of spring wheat right now, and the fact that their economy is okay, but still recovering from COVID, they're pretty price sensitive. They tend to split like Japan. Their purchase is about 50-50 between the Canadians and the U.S. market. I do expect their purchases to increase as we move through the rest of the marketing year. But whether we'll be able to reach the levels we saw a couple of years ago or not is really open for debate, right? It's open for discussion. How are we doing for spring wheat volatility and kind of spring wheat pricing? When we look back historically, same basic patterns we saw. This spike we saw this spring was really driven by the late planting and the spring wheat market saying, we want you as farmers to keep planting, even though we know it's been kind of a crappy spring. And we did get the acres seeded. And actually, as I think most of the guys I've talked to, the bushels as well as the quality were much better than anybody expected, especially given the very late planting. But even if you look at old crop wheat at just under $9 on the futures, those are some very, very good, strong prices. Now, I do have some concerns. So this would be old crop wheat. We're going to use that, again, about 8 o'clock this morning. This 893 is the starting point for delivery. This would be the futures market that the local elevator is going to use. When we look at kind of our support and resistance levels, what's happened trend-wise, we did see a little bit of a recovery into the end of the year, but it's dropped back into this lower end of this pricing range. So in my opinion, over the next probably 2 weeks, it's going to be really interesting to watch what's happening to old crop wheat. Are we going to come back and test these lows, these short-term lows that we saw? Or are we going to start to come off of those? Are these lower prices, is that going to stimulate some more export sales and some more buying by our international customers? So in my view, the next couple of weeks are going to be pretty important for the spring wheat market. Are we going to continue to see this slow drift lower, or are we going to start to see where it with the lower prices, we start to see some export sales and we rebuild back some recovery? And right now, in my opinion, it's kind of flip a coin. It's about a 50-50 odds that each one of those could happen. When we look at new crop, so this would be September spring wheat. Again, we're getting down into some of these levels of testing some support levels. Or we're going to see the spring wheat market break through those and start to drift lower as we go into the rest of spring? Or will we see that support level? Again, will the export market start to recover? Will it start to follow corn if corn starts to drift lower or not? Now, we are going to have to hold, the spring wheat is going to have to work to stay competitive with soybeans and with corn, especially as you get into the central part of the state. And then the big question, of course, is what's going to happen in Canada, in particular with high canola prices. Are we going to start to see some acreage shifts on the Canadian side of the border? Couple slides on durum, and then I'll open it up for questions. And I know Travis, I want to keep you guys on time. Inventories, and again, this is the USDA numbers. We'll get some updates coming out tomorrow. Inventories for carryover stocks percentage-wise for durum are, kind of in that normal range. And I'm going to put normal in air quotes. Okay. What happened in U.S. durum production versus Canadian durum production? Again, the green bars are U.S. durum coming off a little bit of a recovery. Our acreage was up just a little bit. Yields were much better than last year. If you look just at the green bars, we're kind of on the low end of normal. You look at the gold bar, which is the Canadian durum production, and they had a little bit better year. Again, their acreage was up just a little bit. Their yields were good. Quality profile, everything I'm hearing out of the Canadian side is that the quality profile is very good. A lot of it came in as number 1 or a number 2 durum. They don't have a lot of number 3s. So, the Canadian durum supplies are definitely adequate, and ours have been rebuilt kind of to what I would consider average or typical levels for the most recent several years. How do we use up durum? Most of this is domestic. Again, we do export a little bit of U.S. durum, but that tends to be some of that lower quality durum. The core of durum, of course, is the high-end stuff that goes into the European market, in particular Italy. But whenever we see kind of a rebound or a spike in durum exports, it's typically because we've had some kind of a quality problem, and we need to get rid of our lower grade or mid-grade durums into the global marketplace. So what's happening with prices? Now, there isn't a futures market, obviously, for durum, but I did collect over the last probably 6 years, I collected some price data, daily price data out of North Dakota durum prices. It'd be basically up in your part of North Dakota. So if we look at kind of what's happened for price trends, we're all looking back to what happened last year with the tighter supplies, much higher prices. The red line is where we are right now at about $9.50. We've been at $9.50 basically for about a month, between $9.50 and $10. But if we look back a few years, when we start looking at those supplies that are kind of more typical, we have inventories that are more common levels, kind of like we're seeing right now. We're more in that $6 to $7 range instead of that $9.50 to $10 range. So one of my concerns in the durum market, again, depending upon quality and what comes back in the domestic milling market, is, my question to you guys is, what do you think is going to happen to durum prices as we move through the rest of this spring? Obviously, there's going to be some concern and questions about planted acreage. What's going to happen because it is very dry. Are we going to have some more rainfall as you come into spring planting? A lot of uncertainty there. But in my opinion, right now, the path of least resistance is downward. It's not upward. So we're going to have some kind of shock to the system, some kind of real big concern in the durum market to try and hold these prices or move them higher. So if you think about, again, given what we know today, what's the probability or odds that prices will go up from here versus down from here? In my viewpoint, I think the path of least resistance we're looking at maybe some softer prices coming into spring's work. So I just want to caution everybody, we've got to be very careful about setting the right set of expectations coming into the next several months. So with that, I'm going to stop right there. I'm going to stop sharing for just a moment. I do have more to talk about, but I would rather answer your questions. A lot to think about and a lot to digest.
Questions, anyone?
Do you have anything on the oat market?
Oh, anything on the oat market? You know, oats is something that's really hard to track, and I'll be very honest with you. It's one of those specialty markets that I just don't have a lot of good contacts in. So I unfortunately don't have a lot of comments on oats. Sorry. I should have been better prepared because you guys usually have some questions on oats. So that's on me.
Any comments on canola?
Yeah, so canola market. I know the canola market softened some in the, since harvest, but in my opinion, so let me back up a little bit. Some interesting things in the canola market. Historically, the canola market and the soybean market have been very tightly linked. So you can pretty much look at what's going on in the soybean market and tell what's going to happen in the corn market because they've been so closely linked. But over about the last 12 months or so, because of the exceptionally tight supplies in the canola market, canola has kind of separated itself. Sometimes it'll have a life of its own. So sometimes it'll follow soybeans and soybean oil. But if soybean oil gets kind of too wonky, the canola market will take off and do its own thing. So here's the supply demand condition in Canada for canola right now is exceptionally tight. It was very tight last year. They had a pretty good production year this year, but the demand base for canola has been exceptionally strong, both for the export market as well as for the domestic crush market. So right now, the expectation is in the canola market, boy, that demand base is so strong. I really don't see a lot of downside risk in canola unless the soybean market completely fell out of bed, which I really don't expect to happen. So the big question coming into 2023 is going to be, given the very strong prices for canola, will the Canadians be able to expand acreage? Are they going to be able to add enough acreage base to supply the needs for both the export market and all of these new crushing facilities that are going to be coming online pretty soon? And again, they have rotation issues. Club root has been a significant problem. Even though we had really strong profitability for canola last year, we didn't see this expansion in canola acres like myself as well as some other analysts were expecting. So I do long term, at least for my opinion, the next 12 months or so, I don't see a lot of downside risk in the canola market. I think canola prices will stay very strong on both the U.S. as well as the Canadian side. So I know the production costs for canola are very high, not only because of fertilizer, but because of seed costs. But I think there's going to be a decent profit margin for canola for a while.
Future of the Vela ADM crushing plant with the new diesel canola plants coming online.
So Travis, can you repeat that real quick? I missed the first part of it.
Future of Valva ADM crushing plant with the other crush lines or the other plants coming online.
Okay, that's at the Velva plant. Okay, that's a very good question. So I really don't think that plant is at risk. It's been around for a long time. ADM is in charge of it. ADM is a very financially strong company. Obviously, they're not going to go bankrupt anytime soon. There's this strong demand for canola, again, not only for human use, but also for the renewable fuel standards. Now, one of the challenges that the canola Velva plant is going to have is, given these new plants coming online in Canada, and again, recognize it's about, if all 5 plants do become operational, it's about a 50% increase. And with the exception of one, which is in Alberta, all of those plants are right around Regina, Saskatchewan. Okay, so where's the pull for canola going to come from? And the Velva plant is going to have to be competitive. They got to hold the acres we have in North Dakota, and they got to steal some production from Canada. Because when you do the math on the size of the plant and the capacity they have, they do have to import some canola from Canada to meet their needs. Okay, so I think it'll stay in production. It's a very well-financed company. It's a very well-run company. They know what they're doing at the ADM plant. They're going to be competitive, but they're going to have to be competitive with the pull into the Saskatchewan region from the Canadian side. So they're going to have to try and maintain a good contracting program. And I think they're going to have to work pretty hard to maintain their acreage base, so it doesn't, some of those tons, or the hundredweight, the production from in your region doesn't slip into the Saskatchewan market.
Sunflowers?
Okay, sunflowers. So when we look at sunflower and the sunflower market, two big uses, the oil as well as bird seed. So over the last several years, about the last 5 or 6 or 7 years, that bird food market, well, since COVID, really, the bird food market has been very competitive. So in the old days, it was, if you couldn't put it into a crush plant, it'd end up in the bird food market. Well, now, because of COVID, what we found out was that bird food market, it can be exceptionally competitive. Now, on the oil seed side, canola oil and sunflower oil tend to be very competitive. They go back and forth. And there's a lot of end users, especially domestic end users, that want some sunflower oil. And it's a long, long story about why that's the case. But the sunflower oil prices follow canola oil prices very closely. Even though the number of acres and total production of oil sunflower is much less than it is for canola, that oil sunflower market is going to be competitive, and they're going to want to contract and hold their acres. So what I would argue, what I'm trying to get you to think about is, I don't see a lot of downside risk in sunflower. I think the sunflower oilseed sunflower market is going to follow canola pretty closely. If prices fall too far for the oil flowers, it will automatically go into the bird food market. So the oil market right now has to supply not only those customers that really want and demand sunflower oil, but also that bird food market. Now, the bird food market tends to be more stable from a demand standpoint. The amount they need every year tends to be pretty stable. So if we do have kind of a drop off from production, if it's a horse race between the bird food market and a crushing market, many times that bird food market will win. Okay, so I don't see a lot of downside risk in sunflowers. The only way we'd have a problem would be about this time next year, if we have a lot of acres that are contracted and we have very, very high yields. If we suddenly flood that sunflower market, we could see some softening. But in my opinion, again, for about the next 8 to 12 months, I don't see a lot of downside risk in sunflowers. Just because of the competition with canola.
About the war in the Ukraine, that it's supposed to have such an effect on wheat prices.
Did you catch that?
Yeah. So the war in Ukraine, let's talk about that really specifically. So both Ukraine and Russia, their major wheat they produce and export is what we would classify as a hard red winter wheat. Okay, so Russia produces some what we would classify as a high protein spring wheat, but they grow quite a bit of it, but they don't export a lot of it. So the competition from US wheat is really for winter wheat. And so the Kansas wheat guys have a lot more to worry about with Russia and Ukraine and their export levels than we do in the spring wheat market. Okay, so we don't compete really closely head to head. But the fact that they're having troubles exporting their wheat raises global wheat prices. And of course, spring wheat can only get so much of a premium above winter wheat before everybody says this is too expensive and they switch to use something else. So in a big picture sense, the supplies out of Ukraine and Russia, out of that Black Sea, influence global wheat prices. And as a result, has kind of a ripple effect or a secondary impact on spring wheat market. But when you look at who buys spring wheat off the global market, who do we export to? They don't buy much wheat from Russia or Ukraine. So from a direct head-to-head competition, we don't see a lot of head-to-head competition. What it really means is when we look at big global supplies, the supply of wheat is lower, which lifts the wheat price globally, which then can have an impact on spring wheat prices. So it is something that we need to watch. It is something we need to pay attention to. It does impact spring wheat, but it's not a direct, it's more of an indirect impact.
Do they have any acreage numbers for winter wheat out of Ukraine? Yep.
Some early forecasts. I haven't seen any official numbers come out. The early indication is the winter wheat acres in Ukraine, the plantings, are going to be down anywhere from 30 to 40% from last year. Now, again, understand last year, their winter wheat was seeded before the war began. Okay, so this is really the first time for winter wheat seedings that Ukraine is going to have a problem because of the war. And the current number that I've been hearing is somewhere between a 30 and 40% decrease in winter wheat seedings. And some of that is just because of that Russia has now occupying part of Ukraine, but the bigger part is just their acreage. It's hard to get seed, it's hard to get fertilizer, it's hard to get fuel. The fields have already been bombed, and so it's pretty hard to start working around. You think working around slough holes are bad? How about working around a minefield or working around a bomb crater? That's a whole different animal, right? So their production and planted acreage is expected to be down. We'll have to wait to see again what spring looks like and how it breaks dormancy and what their yield potential is. But so they have production issues, but they also have this supply chain. How are they going to get the wheat that is produced exported into the international market? And they got some really serious challenges.
What about barley?
Pardon? I didn't quite catch that.
What about the barley market?
What about the barley market? Okay, so I've heard of a few new crop contracts coming out. The barley market is still going to need to compete and hold their acres. We did have probably a better barley crop than anybody expected, both quality-wise and bushel-wise, but our acreage was down. Inventories of barley, I would consider to be them adequate right now. They're not really short, but they're not surplus. So the barley market is going to need to hold the acres they had last year. We can't see a lot of slippage. The other thing that's happening, and most of you probably recognizing this, the pet food market is becoming a larger portion of our North Dakota supply chain. So traditionally, most of our barley has gone into the malting sector. Again, it's primarily for beer. But over the last couple of years, the pet food market is becoming more of a player. It's starting to use up a larger volume. The numbers that I have seen is about 30%-ish. About 30% of the barley is now going for the pet food industry, not for the malting industry. Obviously, we've also seen this shift from 6-row barley to 2-row barley, which I think long term, will give us some advantages, but 2-row barley has some production issues with it. So with lodging and a few things, the varieties haven't been as thoroughly developed for this region. So the barley market right now, I think will remain stable. New crop contracts, the maltster is going to have to come out and be competitive. I think they've been a little bit quiet and a little bit more reserved. They haven't been terribly aggressive in forward contracting yet, waiting to kind of see what's going to happen in particular soybeans, but also what's going to happen in the spring wheat market.